How to manage an ETF Pro position once removed. So again, it's this question really is one that just depends. And you know, luckily I don't have to answer that with all of my questions, but it depends. It depends on your process. Depends on, how big a position size it is. It depends on, where you executed on that RTA, right? And or sort of within like the trend. This is about ETF Pro, excuse me. So like, where did you execute? How long have you held it? That kind of thing, right? So I think the biggest thing here is Keith. I've been following Keith a long time, and been long enough that when he boots something from ETF Pro, that means the signal's either gotten weaker for a long position or stronger for a short position, and there's better inventory to put on the shelves, right? So I think for me personally, thinking about positions as inventory and removing the cost basis from the equation has helped me tremendously. So, that would be a big piece of advice I'd give you guys is that, think about it as inventory and don't think about it as like, for instance, like DAX, right? Or Netherlands. Don't think about it as, this is something that I'm tied to in terms of like needing to short the Netherlands or needing to short Germany. It's just a piece of inventory, right? And it's an exposure to Europe. And there's still, as he said this morning, still 3 exposures to Europe that he prefers, aka pull Italy and FXE, and just choose that inventory, right? So like if you want inventory, again, in this example, you want inventory that sells, right? So aka a signal that keeps confirming bullish or bearish trade and trend. And when you've got that, that's what you want to ride, right? Those are the side of the positions you want to have larger than or at their close to a max, so that you can really take advantage of those moves, of those trending moves, and then also base your decision off of signal strength versus your entry point. I think that's a huge component here, and something where a lot of people get tied to their cost basis, and you got to remember the market does not give 2 cents about your cost basis, right? And so the cost basis really shouldn't come into the equation. And it's really about when you need to execute either on red or green days and just making better decisions. So both of those things are very hard to do, but easy to say. And it's something that coach has reiterated a number of times since I've joined, the Hedgeye Nation. But it's challenging because we all want to be right? We all want that we executed at the right time for the right reasons, and we're going to make money off that. But, as Mike Taylor likes to say, and tells us constantly, it's better to make money than to be right. And so if that signal or that inventory just isn't really working, just get it off the shelf and put something else on there that's going to be a better piece of inventory for you. So that would be the kind of biggest thing here in terms of managing that process.